Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
All right, guys. Hey, welcome back to the show. I'm your host, John Harcar, and I'm here today with Matthias Gruenwald. And what we're going to talk about is his incredible journey from his first duplex to over 600 doors. Guys, remember, at Investor Fuel, we help real estate investors, service providers, all real estate entrepreneurs, 2 to 5x their business by providing tools and resources to help build the business you want to build and really help them live the life they've always dreamed of. Matthias, welcome to our show.
Thanks, John. Thanks for having me.
Man, I'm super excited to talk about, because that's a huge jump. And, in our conversation prior, it seems like there's a pretty short timeline to go from a duplex to 600 units. But before we get into all that, right, before we jump into the weeds, tell our audience a little bit about you, kind of your background, how you got into real estate, and what got you here.
Sure, absolutely. So I was born and raised originally in Germany. Back in 2012, I moved to the United States, related to my W-2. At that time, I was a plant manager for a facility there, and they opened the new facility in Greenville, South Carolina, where I'm still located today. And I was kind of like the spearhead for that growth at that time. And then, through the following years, I got promoted to COO, and, that comes with promotions and, more income and stuff like that. And then I started realizing, man, I got those, salary increases, but, Uncle Sam takes more and more off that paycheck. What's going on here? So I started reading books and realized, okay, real estate is probably something I want to look into. A lot of tax benefits, and there's a lot of wealth can be created there. So back in 2021, my wife and I made a decision, we want to go into real estate and build something, build our own balance sheet, if you will. And then start looking what we want to get into, what kind of niche. And I always liked the multifamily side, because there were always, multiple units involved. If you have some vacancy, your total income doesn't really drop to zero. So I always liked the, multifamily side of it, the multi-unit. But of course, when you get started, you cannot buy a 20 unit. So you start as small as possible, a small multifamily, which is a duplex. And it's what we did. And at that time, the rates were as low as they were in decades, and it was difficult to get something. So we did a really lowball offer on a deal that's here local that jumped out of contract right before Christmas Eve. And I was like, this is the one. Did a lowball offer. I needed to sell the thing. They fell the contract. And then we jumped in, and they countered a little bit, but we were still like 40,000 under asking, which is unheard of in 2021, because everybody was offering over asking. Yeah. And that's how the journey started. First duplex. And from there, I just said, okay, I want to do a fourplex next, and then do an 8 unit at least or more. And 3 years later, now we have 409 and adding another 180, almost 190 in the next 3 or 4 months. So close to 600.
Let's go back. What was what kind of business was it where you were COO? Was it in, what type of industry was it in?
That was automotive manufacturing. So we did heat shields for turbochargers, exhaust components like manifolds for all kinds of manufacturers. I started with BMW here, again, German company, right? And I came from Germany. But we did a lot of stuff later down the road for like Mack trucks, Freightliner, Corvettes, for Chevrolet Corvettes.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So that's the stuff we did.
So you're in this well-paying position, I would assume, and then you mentioned the Uncle Sam and the tax thing. So what? I know you said you started reading some books, but why real estate books? How did you fall into those?
Right. Yeah. I was literally, when I got my raise at some point, like in 2019, right before COVID, I was like, okay, I need to figure out a way. How do the rich, pay less taxes or no taxes legally, of course. And it always fell back to real estate. I was like, okay, let me just read some books. And I was cheap at that time, still sometimes cheap. And I just bought the cheapest real estate book that's out there. And I don't even know what it's called anymore, but it's part of the Rich Dad Poor Dad advisor group. And I can't remember the author's name anymore, but that book changed my life. It's kind of ironic.
Was it the Cash Flow Quadrant?
No, it wasn't that one. I read that one right after. But he was just going through like the tax benefits and how you increase value and how you can, the Burr method, basically refi and recycle that capital. So that's how I got started. And then I think then my fuel, that was just fuel for me. And I was just dumping rocket fuel on my fire. And then I got sparked by passion. And then I think I read like 70 something books the first year just on real estate, and everything else, wealth building. I was like, okay, I need to learn as much as possible. And then at some point my wife said, can you stop reading and make some offers? Because, let's go, let's do this.
Yeah.
And she's right. And she gave me the kick in the butt and said, let's do this together. And then we did start making offers in 2021 on multifamily units.
Well, that's awesome, because a lot of people do get analysis paralysis, right? They study and study and study. I mean, and really the only way to fail is by doing. So you got your first duplex, right? You read books for a year. How long did it take you once you finally started making offers to get that first duplex under contract?
Probably more than half a year, really. I started at some point early in 2021, probably like April, May timeframe, and we got that first one under contract in December. And to remind you, and I think everybody knows and the audience does too, that was a really tough time to make anything happen because the rates were like super low. Everybody was going crazy. And I was like, I'm not going to give up, but I'm also not going to overpay. I'm very analytical. And then in my position that I was in as a COO, I lived in spreadsheets. So underwriting a deal for me comes natural. I love to look at spreadsheets all day. So I could tell like, okay, this is a good deal, this is not a good deal. And I could tell like what people are offering. There's different types of buyers out there, right? 1031 buyers, etc. They can pay more than you, so you have to accept that. But you have to just stick to your numbers, be true to your numbers, and then make your offers whatever number works for you without overextending. And that's how we got it done. And 6 to 7 months later, we got the first one under contract. And we pulled through. I still own it today.
Oh, do you? Awesome.
Yeah, I do. Yeah.
Well, I think one thing you said too is like, it kind of resonated with me is that you got to make offers because you don't know who's out there that is going to buy. A 1031 buyer might pay more, so you don't want to hinder yourself by saying, hey, I can only get this offers because I only have this type of buyer, right? What lead gen were you doing to find this property or find properties at that point?
In the beginning, very unsophisticated, just Zillow. Telling everybody what I want to buy, and that one I actually found on Zillow. And again, it showed like under contract. And then I talked to my agent, and she said, "Hey, they just killed the contract with the other buyer because he had several under contract and he couldn't get financing for all of them, so that dropped that one." And that was one day before Christmas Eve. And I was like, let's do a lowball offer because I don't think they want to deal with this over Christmas. And they literally jumped on it and they countered, but it was still 40 under asking, which was really nice. And we got that one under contract. And I think we found some small issues with the duplex, and then we retraded a little bit and got it like another 5,000 or 7,000 lower later. But it's a nice cash flowing deal. It's a nice base hit. That wasn't life changing from a cash flow perspective. I think it was cash flow like 300 something a door, which is still pretty good. But what it does, it was life changing in the fact that the law of the first deal is a true thing, is a real thing.
Proof of concept.
Proof of concept. You can do it, and then you do the next one. we were literally terrified of that first rental property. We didn't know, we don't know what we don't know. I mean, like, okay, let's just do this. And I read a bunch of books, listen to Bigger Pockets podcasts and other podcasts out there. Learned a lot of things from people that already been doing.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
It for a long time and did networking and all that stuff, and then moved to the fourplex, and then the duplex got boring. That works and it's great. Let's grow, and then you grow as you get more and more units, and the next deal terrifies you, and then you looking back, the mountain that you climbed and looked down the hill and was like, whoa, I climbed all the way up here. At some point you don't realize how far you're coming until you're actually looking over your shoulder and see where you are.
You mentioned you got an agent and you're looking on market deals. Why was it important for you to have an agent? And did you ever try to do off market, try to find some stuff that maybe was not on the MLS?
Certainly. So the first one, I thought, and from my research, it makes sense on the first deal to have an agent, just because they're holding your hand a little bit. You don't know what you don't know. The second deal, my fourplex, was fully off-market already. So I went right into off-market because I talked to a lot of people and told them what I want to buy next. And somebody heard from somebody selling their fourplex and they want to get rid of it because they need a new roof and all that stuff and heavy renovation. But on the first deal, I would always advise people just to get an agent, just to make sure you get through the full process. You have never bought a property before to understand, how everything works. And somebody holds your hand. And it just protects you a little bit,
Sure.
At that point, you have a bank, giving you a loan as well. They're your biggest partner. They're going to vet the deal too. They want to make sure they get their money back. So if you have an agent, you have a bank loan involved, I think you have some safety net, if you will. Of course, you have to buy the right deal. But that's the way I approach it in the beginning.
Got it. Now, obviously, you've grown and stuff, but looking back at that first deal, what do you think are some of the mistakes that you might have made, or maybe challenges you came across in that first deal versus kind of, you got the flow going now?
Yes, I think the biggest one was that when I underwrote it at that time, I didn't realize that South Carolina does reassess the taxes so aggressively after purchase, especially when the previous owner owned it for a long time. Then it actually can almost triple in property taxes, and that chewed up a lot of cash flow. And it still cash flows today after the reassessment, but I'm paying $2,000 more property tax than I expected. So it was, so that's pretty harsh in South Carolina sometimes, how they do property taxes. That was one of my mistakes. So that can really bite you in some states. If you're not careful. It's easy to go around it, and actually, if once you learn it, it's fine. Like in South Carolina, many counties use like Q Public, for example. You can go in, put the address in, and there's a tax estimator, and you put in your purchase price, and then it calculates what the new tax will be. It takes you 5 minutes. I didn't know at the time. I thought like, oh yeah, I'm gonna round it up a little bit. They paid $4, I do like $42.50 or whatever, but in the end it was $6, so almost $2,000 more. I was like, whoa. And it eats a little bit in your cash flow, for sure.
Yeah.
So it went from like cash flow like $700 a month, pure cash flow, to like $500, so $250 a door later. And when I say pure cash flow, that's after like 5% vacancy, 5% capex, 5% repair maintenance and stuff. That's what I mean with pure cash flow. So.
Right. So now when you're underwriting deals, are you, especially if they've been on for a while, are you kind of, anticipating all that tax increase, or how are you kind of putting that into your numbers?
Yeah, certainly. Definitely going to the calculators. Many counties I'm doing offers on, they have like their own tax calculator. At least you find like the tax rate and you can calculate it that way. If you just do back of a napkin, you can just do, if I know that I owned it for 20 years and I'm paying $1,000 for a property, it probably goes to 2 or 3, just put that in as like a gap filler, just to know you're protected, and then you can do some fine underwriting later. But I definitely, since I did that first deal, that mistake never happened again. And I think that's something to be said here. That's why you should start with a 20 unit, because if you're wrong on the rent projections on 20 units, you're wrong 20 times, not just 2 times in a duplex. So start small, baby steps, and then you start running at some point.
Before we talk about kind of how your growth and where you're at now, just a couple other things. What was your mindset on going into a duplex? Why didn't you start with, like most people, a single family?
Simple reason. It was always about, I don't like if somebody moves out and my income drops to zero. I was like, I need as many units as possible. It was just my mindset at that time. I
Yeah.
thought, okay, at least you're 50% occupied if one moves out. And I was like, man, the fourplex must be cool. If one moves out, I'm still mainly occupied and I can still cash flow with 3 units if I buy it well.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
So that's the mindset behind it. I just like to have multiple income streams because on a single family home, again, if somebody moves out, entire income is gone.
Yeah. Were you at the beginning self-managing some of these things, like the duplex, or did you get a property manager from the jump?
We actually managed it ourselves. My wife is doing the property management. Again, total team effort on our
Awesome.
end, and it's really simple. I mean, we're very systematized and very organized and structured. And we have a property management software we're using. The tenants communicate through that. I pay online and everything. I think I haven't been to my duplex in the last year and a half, and I only own it for 3 years, so we don't have to go there.
Sure.
So
Yeah, that's
it's
awesome.
yeah, we self-manage. And also the reason why we self-manage, some people think it might be foolish to do so because it's a waste of your time, which I partially agree. But the other end where I disagree with is I like to actually know how property management works so I can manage a property manager down the road better.
Right. Right.
So that's the
Yeah,
way I
and
look at it.
that's true. I mean, because a lot of people, well, I'll just hire a property manager, but if you don't know what he does, you don't know that process, how do you know if he's doing the right stuff? How do you know if he's executing properly? So yeah, that's
Exactly.
big. Yeah. So now let's talk about kind of, you mentioned you were at a duplex. You mentioned you were, went to a fourplex. I know what we talked before. There was RV parks. Now you're into mobile homes. What were some of these challenges that you faced jumping asset classes? What new roadblocks, what new obstacles did you have to overcome?
Man, that was a total mindset shift at that point because at that point you definitely need a team. You do not that stuff alone anymore. It's really important to find a partner, and actively searching for one can work or cannot work. So I was actually joining Masterminds at that time, and actually start working with people, just having calls every day with people in the
Mhm.
mastermind, see how I can bring value to them, and just helping people out, just giving back basically. I think it's always the wrong approach to see somebody that you want to work with and just tell them like, how can I help you? Let me know how I can help you. I think the easiest would be just to figure out, okay, where they need help with, and perhaps that actually is your strength. And that happens with my partner.
Yeah.
My partner now is like, one of my best friends too, Tim Woodbridge. He's a phenomenal partner to work with, great human being, and he does a really good job of acquisitions. He's a master in acquisitions, but he doesn't like underwriting, and I love underwriting. So perfect match, the perfect partnership right there.
Yeah.
We work really well together, and we've been growing a lot in the last 2 years. And I think going from like the single family or just residential, basically small multifamily, to commercial, there's more acronyms. It sounds fancier, but it's the same stuff. It's just
Sure.
there's a lot more zeros. I think that's another thing where people get stuck too. There's a lot more zeros. But what I realized is the bigger the deal, the easier the deal gets. Usually, you have economy of
Really?
scale. You can at some point, if you buy like 100 unit, 150 unit mobile home park, you can hire property managers full time because you can pay them like $30,000-$40,000 a year. Or somebody does it as a side gig at that point. But that's a ton of side gig income for managing a property. So if you have a community manager that you pay for that. So yeah, I think a lot of people are scared by the zeros, and they see just in the spreadsheet, oh, I need like $1 million down payment. I have $500,000 capex. I don't have that money. But the thing is, at that point, you have to raise the money, obviously, or you have to find partners that have the money, all chipping in together. You have to be creative at that point, and then that basically restarting the law of the first deal. You have to then do one commercial deal, and you realize this wasn't that bad. This is doable with a team. So that's where I was, and that again, rocket fuel on that concept. So at that point, we
Awesome.
just kept growing.
Um, the process of underwriting, a smaller commercial versus, a big RV park or mobile home. How did you learn that?
In that mastermind, they actually had like some kind of Shark Tank kind of thing. You can actually submit like a deal that you want to review with them, and they basically took it apart with you together. They ask you all kinds of critical questions because the main guy in that mastermind has well over 1,000 units or 2,000 units even. And he just takes it apart for you. They don't want to have any equity or nothing. They just want to help you. They want to make
Yeah.
sure you don't buy a bad deal. And that
Yep.
was really good. And they just had critical questions. I think the first deal I brought in was like somewhere in Louisiana. I was like, who's going to manage this? I'm like, I don't know. And they were like, okay, good. That's a good point. We maybe should figure out who can run this for you. And then, like, okay, you have to underwrite that risk in there. Maybe have to pay someone really well that lives on site. And again,
Right.
in that mastermind, there were people there from that area, and they actually lived in that town. They were like, I can partner with you. And then you just have to have that network and actually start pulling a puzzle piece together. Ironically, that deal didn't go through, but it just came back to us through another broker. So we're actually offering on that deal again. We still haven't gotten a contract, but that was that deal that they took apart for me that one time.
Right.
So yeah, that's how you learn to underwrite it and just get better and better at it. Repeating, that sometimes you do mistakes, but you learn from them and you just get stronger and stronger. Like I did with the duplex, with the property tax being miscalculated. You use some small mistakes here and there, but people, a teamwork, right? People look for the underwriting with you. And at some point you capital raise, and some of the investors want to see the underwriting, and they make you aware of things that you might not have looked at from that perspective. And then,
Yeah.
and then you're like, okay, yeah, actually, that's a good point, Mr. Investor. Thank you so much for letting me know that, and I can update on my underwriting. So constructive criticism it
Yeah.
makes you a lot better in underwriting.
Yeah, and they say network is your net worth, right? The masterminds are just kind of like how our mastermind is. It's about the growth and the opportunity and people to come in and lift your business up. What mastermind was it, if you don't mind me asking?
It's the My First Million Multifamily, MFMIM. That's the first one. I mean, I'm still in there right now. I'm actually running the underwriting call for mobile home parks. So again,
awesome.
giving back to the community. It's
Yeah.
every second Thursday. I'm in another mastermind, the Better Life Tribe with Brandon Turner as well. So that's a big group. It's over 1,000 members as well. Yeah, those are the two masterminds I'm mainly in, and looking
Very
into
cool.
more future masterminds, like capital raising focused in the
Yeah,
future.
yeah,
But
yeah. What do you think that? So, I mean, I know you kind of touched on it, but what is the most valuable thing you're finding in these masterminds? Is it kind of like that board of advisors type of group?
yes, that helps, especially having access to people like that and have like those. I mean, it's like the Better Life Tribe, for example. You can actually have a call with Brandon Turner with other people once a month and ask him questions. And he, as you know, that he's very heavy in mobile home parks, and
Yep.
I have very specific questions. I want to go from he went from 0 to 14,000 units with apartments and self storage, of course, but they have a lot of mobile home park units, so I can ask a lot of questions. Hey, what do I have to do, and who do I have to become to go from 600 units to 6,000 or even 10,000 units? So having those people in those groups to tell you where the road can lead you and how to get there is very powerful. And there's this famous quote, right? If you want to know the road ahead, ask the people that are coming back, and that's kind of the thing. I always like to be in rooms where I'm kind of the dumbest,
Yeah.
and just ask more questions. And that's what I like about the masterminds, and then the group around it, the network. It's other
Yeah.
people striving to do the same thing as you, and then you can ask questions and you can learn together or even partner. I mean, in that
Well,
mastermind,
yeah, I'm about to say, yeah, you said partner creates opportunity,
correct?
right? That
Absolutely,
you might not otherwise get.
that's right. Absolutely.
So, what does your team look like today?
So we have Tim and I are the visionary integrator, typical constellation. So I'm the integrator basically, and I'm more like 70% integrator and 30% visionary, and
Okay.
my partner Tim is more like 80% visionary, 20% integrator. And from there we have acquisitions, and then acquisition with investor relations, which is another partner we have in that deal. And then under me is basically all operations, the underwriting, the financials, the financial team. We have a veteran accountant veteran on the team. He's 18 years in accounting, has his own accounting firm. He basically does like fractional CFO work for us for equity in the deals. It gets paid that way. And then we have, virtual assistant, virtual property managers that takes the phone calls and stuff like that. Manages the maintenance requests if they're coming through. Each property has its own vendor list. They know exactly who to call. If that property has an issue, this is the community manager. They give them a call if they need boots in the ground. To reactor for leasing, for showings and stuff like that. And And then again, the community manager, individual managers in each of those communities that we have, or maybe one for multiple, and if they're in the same area. So yeah, that's the main structure right now. And we actually just hired somebody that's more like our data analyst. That's really strong on Power BI to put all the properties together on the dashboard so we can look at the KPI for the entire portfolio. Because now when you're talking 600 plus units, and we want to crack 1,000 by early next year, we have to look at the entire health of the company.
Yes.
So that's the current structure at the moment.
Awesome. It sounds like you built a great team. What trends do you see or are you seeing in the multifamily or maybe even the mobile home space, as things are moving along? I know we have the interest rate issues and all that type of stuff, the way the economy. What are you seeing the path as right now?
With mobile home parks, there's many reasons why I like him, but affordability is a major issue in the country, obviously, and not only in the US, but also in other countries. I can tell you the same thing happens in Germany, where I'm from, but affordability is a big issue. So if you're in the mobile home park industry, I mean, those homes can be bought relatively cheap. I mean, they definitely got more expensive after COVID with the run-up in inflation.
Right.
But I mean, you can get a really nice, 2-1 mobile home for like mid 50s, maybe even the 40s, like a 3-2 we bought for like around 70,000 with setup and transportation, everything. It's more like a $60,000 home. Put that on a lot somewhere and sell that off. I mean, it's as affordable as it can get. Tiny homes, they become more popular. We're actually talking to people that can build those things, and we can use them for infilling, empty pads on mobile homes. So affordability, we're fulfilling a need here with mobile home parks to provide affordable housing, which I think that's really a trend in the future. You see a lot of big companies, big PE firms coming in, getting very active in the mobile home park field right now because of that reason, because we're not going to fix that anytime soon. And not at least in the next couple of years. It's going to take a while to get that inventory up, obviously. And I like in the mobile home parks, you have a low, expense ratio. So I think it makes it very attractive for investors and in institutional investors as well, because it's especially if they're all tenant-owned homes. If you have parks like that, very predictable income. You don't have any crazy expenses usually, which makes it really predictable, and it's fulfilling a need for affordable housing at the same time, which makes it really powerful.
Unless you have a bridge in the back that floods and traps people.
True.
If someone was thinking about making a transition from whether they're doing just single family or maybe even small multifamily to the bigger units, to the mobile home parks, RV parks, I mean, what advice do you think you would give them just to kind of get pushed in the right direction?
Get the right rooms. Tell everybody what you're wanting to do and what your next goals are. Don't change your words as well. Don't say I would like to do this. Say I'm doing this next. And then if that makes a big shift how people perceive how serious you are, and you're training your mind too, I'm gonna do this next. Be really ferocious about it as well, and get in the right rooms, and be a likable person. I think it goes a long way if you're likable. If you're just a jerk and nobody wants to work with you, I think you will have a hard time in the industry. That's for sure. But just be the most interested person, not the most interesting person, if that makes sense. Like that. Ask questions, see where the big players are. I was going to my local RIA meetings, and I always try to sniff out who has the 2,000 units and just ask as many questions as possible, as I can. Like, how did you get there? And how did you do this? And how do you do capital raising? How's your process looking like? What's your team looking like? Asking all those questions without being annoying, of course. But, usually when you look back if I look back at that, in those right rooms and asking the people those questions, they're always very happy to help, because usually the people that have this portfolio they have built over the years, they love to give back, and they see maybe themselves at that point, like, hey, I was at that time had 0 units or just a duplex, and I would love somebody would have held my hand a little bit and helped them a little bit. As long as it's a nice person that everybody's happy to help each other in the industry, I feel like, which I love in the real estate industry. There's many people have an abundance mindset, and a lot of people helping each other reach their goals. So that would be my main advice. It's all about mindset.
Yeah, no, that's huge. Set aside the ego. I love how you said that. Be interested, not interesting. You're going to go a lot further. If folks that are listening to this, and I know you mentioned you got a website, you're doing some raise. Tell folks how they can get a hold of you. Kind of, what about you that or you could share that you might be able to help?
Yes, absolutely. So we have a website. It's wcginvestments.com. You can reach out there, and my main path's on that website as well. You see my email address on it. But there's also like a form you can fill out and get in contact with us. So if you would like to invest with us, or if you just want to reach out and learn how we do things, you can go there. I'm very active on LinkedIn and Facebook. So if you just really put in my name, Matthias Gruenwald, as well, you can get in contact with me. And yeah, I'm happy to give back and tell people how I did it. I have a lot of people reaching out almost every day how I did it, going from a W-2 to full-time real estate. And I'm always happy to jump on a 30-minute call
Nice.
for free, of course. I'm not going to, do a charge like a
Venmo
fee
me
or anything for
$1,000.
a consulting fee. Yeah, exactly. Only $10,000.
Yeah,
The
that's
second
it.
call.
Right.
But I'm happy to help reach out, and I would love to jump on the call and help people to achieve their dream.
Awesome. Matthias, sorry. Thank you, man. I'm congratulations on your journey. That's huge. In such a short time from going from, from where you started to all these doors. I hope you guys picked up some really good nuggets here. I mean, I took some really good notes. There's a lot of things that I think are very pertinent, especially with the, the mindset piece of a lot of this, because that's really what it is. Thank you guys again. I hope you enjoyed the show. Matthias, thank you again. And we'll see you guys all in the next one. Cheers.
Thanks, John. Cheers.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.